Alrighty, Doc here from North America. Good morning, good afternoon, good evening. It's TGIF. It's Friday. Thank goodness it's Friday. End of the week, ready to get onto the weekend. And in the States here, we do the Memorial Day weekend on Monday. So the world does May Day in the beginning of the month, on the first, I guess it is. And then there's Memorial Day. I think England does Memorial Day today, possibly. I don't know. It's very close to our Memorial Day, but we're on Monday. They're on Friday. The war to end all wars. This is a remembrance of the World War One, and then obviously it's carried over into every other war we've come up with at this point. So we're gonna, we'll be here on Monday. We're ready to, be in the saddle again. That's what we always are. We're totally, the markets, they may be closed here in the States, and I don't even think we're going to be electronically even running. But what will happen is currencies will be electronically running. We'll be able to see currencies, and it'll be that type of thing. I think Globex might be going. I'm not sure. Some things will be. Most things won't be though. Stocks and so forth. Everything will be relatively closed. It'll just be the currencies, and I don't think they'll be able to see interest rates on any particular level. But we will see how it all plays out in the end. So, I know Giannis is off and about today. He's not around. The head analyst for Dukascopy, who jumps in a lot and has some nice questions and conversations and points of view. Robin's here. Just a couple bodies here and there. I see some people in. It's good. So, stock markets are kind of quiet. We've had a nice rally back globally. We got down to the 20% area, and someone reminded the Federal Reserve that they're the buyer of last resort. And Allah voila, we have a rally. Dow's up about 1,000 points since last week. We'll show you that real quick. Give you a little rundown. You can see right there, Swiss franc still moving against the dollar very well, firming up. I'm not sure. I guess it was a combination of inflation, interest rates, and so forth. Now that they see that interest rates are not going to go flying to 4% or even possibly 3.5%, all the currency pairs are going back to the old range. But let's just take a quick look at the Dow Jones Industrial Average right there. And at the beginning of the week, let's see, that's Friday, that's Thursday, that's Wednesday, that's Tuesday, that's Monday. So last Friday, the Dow Jones Industrial Average futures contract closed at 31,213. And right now, as we speak, it's trading at 32,630. So that's 1.4 or 1,400 points higher. So, zoom, 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 zoom. That's what happened, basically. Lifted up, the stock market. First of all, we talked about it in the beginning of or at the end of last week, we talked about it, where the Dow Jones Industrial Average had dropped 9 weeks straight. First time in history of the index. 1929 didn't drop 9 weeks straight. 1937, the worst of the Depression going into 38. Did not go 9 weeks straight. The crash of 87 didn't go 9 weeks straight. Nothing went 9 weeks straight. COVID couldn't even make it 9 weeks straight. But selling here and raising interest rates, and the Fed, the buyer of last resort, kind of walking away 9 weeks straight. And that seemed to wake up the Fed and woke up a lot of people and thought, oh my goodness. And as the jokes were at the beginning of this week about Mr. Powell growing hair on his chest, he was a he-man. He was going to raise rates half a percentage point every Fed meeting now. All of a sudden, he came out on Tuesday with a statement that was totally different. They said, oh my goodness, he shaved the hair off of his chest. He's not that big he-man anymore. He's not going to raise them. And so then that's what we've seen now. We've seen, hey, Jordan. So we're seeing now, we've seen this whole week, and you can see that the currencies picked it up even earlier. You can see that. Let's just go back to the currencies again. You see that the currencies went into a sell back on the 17th and then the 18th and the 19th and the 19th and 20th. Yeah, so 2 weeks ago, they started to know that Mr. Fed was going to chill out over it. By the end of that week, right there, they had made it very clear that the Dow had dropped way too much in historical terms. And sure enough, you can see the pressure went on to the green line of the weekly, and you can see over here on J4X, it was a sea of red, and the green line here was underneath. In other words, the selling came back in, and they stopped buying because they were now not as concerned. And I think I mentioned it going into last week or the beginning of this week that you could see that they were projecting a year and a half out that the 30-year would be up around 4%. And all of a sudden, it started to fall apart going into like Thursday of last week. Wednesday, it started to back off. Let's see if we can put a picture up of that too. Let's go back to that one. And there it is right there. The 30-year bond. I guess it was like the 18th. It started to pop. I guess that's the Monday. So they started thinking about it. And you can see we'd gone into the buy. Bond Vigilantes really kicked it up there. That's not a sell there. Let's get rid of that. And get rid of that. And so the Bond Vigilantes tried to stop it on, I guess that would be Monday a little bit, but it didn't seem to work any. But they jumped in even sooner. And we've talked about that. Matter of fact, it's kind of interesting. We talked about that in the beginning of this week. We discussed the idea that you watch the bonds. The bonds will tell you what's going on ahead of everything. And I heard that this morning. Someone said something about something on one of the business shows, saying, bond. If you have to follow something, follow the bonds. They said maybe they're listening to the Dukascopy webinar here. And George, Doc, what does delta mean in options language? Delta means the rate of change, just like in physics or math. Delta, it's the same thing. They call it the Greeks. They use all the same. The Greeks represent mathematical descriptions of movement, and it's kind of like wave front versus group wave group versus wave frequency. In other words, it's all the Greeks. Delta, rate of change, a point in space subtracted by the distance it travels and how long it took to get there, and those two things, distance to that point and the amount of time. So it's a rate of change. So it's just basic mathematics and physics. And they refer to them as the Greeks. So gamma is like a potential. It's kind of like the unwinding or winding up. Entropy, expanding, contracting, potential energy, it's all that physics stuff. That's why they call us rocket scientists on Wall Street, us option derivative traders. They refer to us as rocket scientists because we use all the mathematics of rocket science and physics and so forth and all the math of it. I hope that helped you. So so the delta. So imagine you have a call option or a put option. It's going to have a delta, and the relationship of that delta will tell you how it moves against the product. So in other words, let's say you're looking at. Let's use a good example here. We'll give you a good example. This is a good day to divert like this. Let's put up the euro, since it's the most popular. Second largest economy in the world, second most popular currency in the world, that type of thing. So you have here, there's the euro right now trading at 107. So imagine if you looked at the 107 call, let's say 1 month out. Okay, well that would have a delta probably in the 40s, something like that, 0.40, almost. The idea is you can only have a 1.00 or 100 delta on an option, and the 107 put probably is trading in the same area, like 38 to 44, something like that, with about 3 or 4 weeks out, and then so forth and so on. So like a 108 call right now is probably trading, if the 107 delta is say 0.45, then more than likely the 108 call is probably a delta of 3.7 or something like that, or and then the 109 would be like 3.1. It would be smaller, a less delta. And what it does is, and then if you went and looked at, say, a 104 delta with a couple weeks, more than likely it would be like a 85 or 90 delta. It almost would be 100%. And if it was, let's say it was going to expire in the next 2 days, more than likely it would be trading at 99 delta. And so there's another function that would fill in to the discrepancy. So if you have a 4 week option, and it's, let's say it's the 104 option, call option for euro, it might be like 88, 87, something like that, because that 13 points out of the 100 is the time decay. That's what we refer to as theta. So, all right, I think that's. I don't want to throw out any more scarier words out there, but glad to answer the question. And then gamma kind of is another theoretical thing about the combination of the strike price, 104 versus 107, and what the potential is. And I used to call it negative gamma, and my mentor was a math professor, and he'd go, "What the hell's a negative gamma?" Or I would refer to it as plus gamma. That's what it is. Trading plus gamma versus trading minus gamma. And he'd go, "No, what? No." He would try to tell me there's only gamma, and I'd go, "No. If you short all those calls and puts, and you don't hedge them, then in other words, buy other options, then you're basically generating a negative gamma." And he'd go, "No, that's not right." I said, "Yeah, it is right." And he'd be like, "I guess you have a point there." And I used to think of it as negative gamma plus gamma. In other words, if you're buying straddles or buying option spreads, like binaries are always like a plus gamma. When you're buying a binary, it's always a plus gamma. And to me, a minus, it would be selling the binary, would be a minus gamma. So anyway, that's all right. I've done drifting there. Sorry about that. But I love answering option questions, George. Love it. All right. So, it makes me feel young again. Let's see now. All right. So from there, let's see. So anyway, we were looking at Swiss, and we can do the same thing right here when it comes to let's throw it up on J4X. The second largest economy in the world is the European Union, and the currency is the second largest currency in the world, and that is right there. You can see that. You can see all that sea of green, on the J4X, and the lines. Where's the lines? There they are. It's been running up, showing strength, and it's been a combination, I would have to assume, of inflation, interest rates, and the war in Europe. All three of those have been the major influence that drove all these products out of their range. And that's remember, they don't really inform us. The Federal Reserve and the government doesn't like to tell us as traders what's going on. They like to just try to trick us a little bit there. So obviously, we saw all these things move out of their range after a couple of years. So there must be a component. There must be some type of component with the Federal Reserve to interacting with other central banks. There must be a component in there that has something to do with inflation that set it off. Because every time we saw interest rates move, normally they all seem to work together on one level or another. But what we didn't see is there must be an inflation factor, an inflation variable. And so the central bank here, the Federal Reserve, basically, got trapped, and all the currencies were allowed to move out of their ranges. And I'm sure that didn't make the Federal Reserve too happy, because that wrecks stability. And that's probably where we're at this moment in time. You know what I mean? It's at least it was a tell. It was a good tell or an indication of what was going, how the Federal Reserve and the world's other central banks function because of this. I mean, we've seen interest rates go up and down, and we've never seen them move out of their range like this. But all of a sudden, the inflation explodes, and it takes them and flings them. Between that and the war in Europe, the two things have had, they're both definite variables. That's for sure. All right, from there, let's go over to the GBP. Let's see what the British pound is doing. It's looking very firm this morning. You see here, we've been in a daily buy now since back in here. And you can see the, boy, too bad this, I'll tell you, if this green line was busting through there, we'd be like sending an article over to Janos in a heartbeat. Let's put it up on J4X. And if we spot one there, Robin and I will put an article together over the weekend and send it out as we go through the list here. All right, and you can see the same thing going on on the British pound. Sea of green and green line above the dashed line, just like it is over here. Let's see. Let me just cancel that out a little bit. Where's that at? There's Mr. Mouse. There we go. So you can see that strength has been really battling. And I'm always confused why. I guess that's why the FTSE is probably one of the strongest indexes of them all, Oh, Jordan says, British pound 2-hour chart looked like a wedge sort of price action. Let's take a look. Let's looky. Let's see, where's it at? We were looking at the euro yen there. We'll put it in the euro yen box. There we go. And we'll go with something like, let's do a Tesla, 18 days back. And we're going to go 2 hours. Hours, 2. And, we got to change the instrument. So that's it. GBP. There we are. There we go. Let's see how it looks. Maybe I should change the time a little bit. Oh, here it goes. It fills in. It's filling in. Is it? Still calculating the data. It's getting there, though. It put in all the... See how far back it goes. It goes back... does it go back to the beginning of the week? Goes back to the 9th. Okay, so not too bad. Maybe we should put 1 hour in and see what it does with 1 hour, and then try to expand it just to see if there's a time problem. I know we're going to be able to get it. I just don't know how many days back I have to do to get it. Okay, so here's 1 hour. Let's see what it does on 1 hour, and then we'll find a way of getting that calculation in there. Because I want to look at it through the eyes of our mathematics at the same time. Maybe I should go like this, shorten up the time frame too. Let's make it like 3. Let's see what happens when I go with 3 days back. Oh, it did. It just filled in too, didn't it? Okay. I just looked up. Darn. Okay, so now let's go 2 hours. And make it 6 days back. There you go. Okay, now let's do this. Let's go with 9 days back. All right, and then what time frame, Jordan? 2 hour chart looking like a wedge sort of price action. Let's get back 12 days, and we'll shrink it down, and then we'll be able to see our math and the wedge you're looking at, or partially looking at. There you go. And let's go to 15. Now let's scrunch it up. Wedge. Actually, it's a rise. I guess you could call it a rising wedge, right? Let's do another. Let's go to 18 days back. Or is it? I guess this. There was a wedge there. I guess that'd been like a 1, 2, 3, 4, 5. I see that one here. Let me draw that in for you. So basically, whoop, right there. I can see that one right there. And so 1, 2, 3, 4. I guess that's the 4 right there. 4 and 5. Now that's an R and Elliott triangle. And W.D. Gann and him both, especially when they had their hedge fund with Jones, I think we've had conversations about this, about W.D. Gann, R and Elliott, and I forget what Jones's first name was, but he's the father of hedge funds. He's the first to really be a documented hedge fund. And they all worked around 45th or 46th Street, which was Midtown, where all the hedge funds are today. And that's where, like in other words, Wall Street's down in lower Manhattan where the exchanges are. And Midtown is where all the hedge funds were, or funds are now. That's where they all are now. But that's where, and R and Elliott and W.D. Gann had offices next door to each other back in the 40s or 30s or something like that. I guess they kind of disappeared. At that point, W.D. Gann was really old, but he was there. And then Jones was like 2 doors away. And there's, what do you call it? There's rumors and stories that the three of them were working together. And one of their theories that they worked on was defining triangles and flags and things like that. And that would be one. Let's widen that out just to show it. And they used to they had 2 types they defined. One was a 5 wave and one was a 7 wave. So it would have been like, this would have been 1. This is 2. This is 3 right there. That's 4. Whoop. That's 4. And then that's 5. And notice then it breaks out, and normally it'll go this. It'll do this. It'll come and challenge that. Right there. And it does. It goes up there and then starts over again. It becomes a resistance. And then you get the same thing again. Now you get almost like another flag. Only this time it's an expanding flag. And so you got 1, 2, 3, 4. And then there's your 5 breaking out right there again. So yeah, you were right. You're identifying it. This is old technical analysis. Is that right? Maybe that's what it is. 1. Let's get rid of that line. We'll draw a line in there. This is old tech. And so they take that, like that. We'll turn that into a white dotted line, or a dashed line, or something like that. There we go. And make it thin. Okay? And so this one here, we can go like this. We can get really exotic. This one right here defines the first one. And the moment it broke the downtrend one here, that's the 5. So this is 1, 2. Oh, we'll get it really nuts here. We're going to go. This is Friday, so Doc is going to be really, really crazy. 1. And then I guess that's 2. This is 3. And R.N. Elliott and W.D. Gann, there's some writings about this from them. And this is the years when they were teamed up with Jones, back in the late 30s, early 40s, something like that. And the news is, the information about this has only come out over the last 10, 15, or let's say the last 20 years, since the hedge fund industry has become more visible. And so that's the 5 wave. There's also a 7 wave one they described, and it comes up. All these things are supposed to come up and hit here. Then it does that. You see that it comes up in here, and then you get another one now. You get another one. You're getting like a flag right there, I guess. And or you can try to dig out the triangle from there where it broke out. that, and then it becomes a channel, actually, this one. Let's see if I can draw it. It's supposed to identify the tops or something like that, top of the channel. So, I hope that was helpful. Does that make any sense to you? Just finished a book from R.N. Elliott. Yeah, he was an interesting guy. Is it Bob Prechter's, or is it actually, or is it R.N. Elliott's own work? All right, as Robin says, silver. You want to look at silver? Yeah, we can go look at silver. I'm going to save this. Save workspace. Save workspace as. Just for interest's sake, we can go look at it again next week. All right, now let's go over to silver. There it is right there. Matter of fact, why don't we make a copy of this, and we can, if we draw it all up, we can park it somewhere. This way it doesn't confuse those who are not involved in it. There's silver. And let's see, what do we got going on in silver? Is there anything developed from it? It is looking firm, that's for sure. But it's not breaking down, you know. It's been in a buy since here. It gave us a red and green here, so it couldn't go into the sell. And now it's still climbing after, what's that, 4, 5, 6. Is that right? 5, 6, 7, 8, 9. This is the 10th day. Yeah, Jordan, take a look and see who's the writings. I can give you some information on whoever's writing it. If it's R.N. Elliott, or if it was or if it was Robert Prechter. Okay, there you go. Let's see. So there's the silver, Robin. It looks like the nice part is this. It's trying to lift here. That's the good part. But truly disappointing, you know. I mean, overall. I mean, really disappointing. I can't believe it broke the 20. I say it all the time here. I can't believe it broke the 24.55. It's like, really thought that might have meant something. It seems to have meant nothing. I mean, that became that resistance we saw so many times. Yes, indeed. So, let's see what else we got to say about any of this. No, I don't see anything else jumping out, you know. What else can we say about any of these, really? I just don't see anything else really jumping out when it comes to the silver. Wish we saw something like a triangle or something like that, something we could get our teeth into, you know. All we have is a channel, and the worst part is we got this thing's still in that weekly sell. You know, it just is not. Let's put it up on J4X. It is just not interested in getting going, not at all. And that's the whole gist of it all. Yo, Robin, what's shaking?
Indicator.
Say that again?
The volatility indicator on the daily.
Oh, let's see, volatility indicator. Wait, oh, is there a like a VIX type thing?
No, the gold lines on the.
Oh, the time manifolds themselves, yeah.
Look at that.
The way it's widening.
No, it's starting to widen.
Yeah.
Look how tight it got.
Yeah, that makes sense. Yeah, that makes a lot of sense. And then you can see.
Everybody might want to hear about it.
No, that's good. Like I see that, like right here. Yep. The on the daily, it's starting to widen out. It's come so tight right there. I see what you're saying right there.
Yeah,
Yeah.
that's what I noticed.
Yeah, and then,
Okay.
but look at the weekly. Look at the weekly. Look how wide that's gotten. It's starting to really take off. See the
Yeah,
width of
I
that?
see.
That could be a sign of something. A sign of change. Okie doke. Smart.
Okay.
Yeah, ring back if you see something.
All right. Bye.
There was Robin calling in about that. That makes total sense. He's looking at the and that's why I always say that to a lot of traders too. I said, you may see something in my work, in Rob and I's work, the Chicago Quant. You may see something, and one of us may not see it. It's like I always say, it's like going to a museum, and you look at a painting, and someone's standing next to you, and they're looking at a painting, and they see one thing, and you see another. And it doesn't take the beauty of it away. It just some people see one thing, some see something else. Doesn't mean you don't see the same beauty though, or in this case, the same direction. Just finished Nature's Law. That's also have read Frost and Prechter's wave principles, key to the market behavior. Yeah, I think that finished Nature's Law. I think that's R.N. Elliott's work itself. I believe he wrote that. He didn't write a lot. He was. I mean, he really didn't present a lot of information as much as you would have thought, because it was a turn of this. It was like he got going in the 1880s, 1890s. He's older than W.D. Gann, and so it's not. It wasn't that normal to. The avenues weren't there to actually project your ideas. Imagine if Tesla had been born maybe 30 years later. Tesla would have been way more, written up information-wise. You would have learned more about Tesla. But it was really, it really was, just a miss, Yeah, I think I have an old original book of that. Or was it Ralph Nelson Elliott? That's it. Yeah, I think that I think I have a copy of it. That's what it is, of Elliott's work. Let's see, R.N. Elliott. Let's see when he was born. I think he was born in like 1871. 1871. He died in 48 in Kings Park, New York. He was from Maryville, Kansas City. He was like an actuary or an accountant, that type of thing. He got sick. He worked for, what was it? The Banana Company, where they built railroads into the jungles to actually bring bananas to the United States. And he got sick, and he was bedridden for a bunch of years and developed Elliott wave theory, reading the markets every day. Chiquita banana or something like that, or American brands or some type of thing. And he was 77 years old when he passed. Notice he passed in New York. Information, as I said a little while ago, it was right. It was going into. There was rumors out there about them. Just mild rumors, just a little information here or there. But then the hedge fund industry became popular in the late 80s, going into the 90s, going into the 90s. It became very popular all of a sudden. And you started to hear about different hedge funds. And some of the people who were involved with R.N. Elliott and W.D. Gann and Jones started talking about that they had offices next to each other up at Midtown, where it's the heart of hedge fund universe now. And so between that and Greenwich and Connecticut was another heart. Westport, Stamford, and Greenwich. There may be one in New Cana, but more than likely they were working in Greenwich. And so the hedge fund industry became well known all of a sudden. They'd been hidden for a long time. And then the story started getting out that some people who knew people that actually worked with those guys, with Jones and W.D. Gann, because Elliott had died in 48. So, there were some people around from the other offices, from Jones, and I think Jones died in the late 50s, early 60s, and I think W.D. Gann was the same way, late 50s. So there was enough people around, but for R.N. Elliott, I don't think there was that many. He passed in 48, so more than likely he might have only been they say that his office was there, but he had only been working with them. Supposedly, the rumors are that they opened those offices up in the late 30s, early 40s. So they were in communication somehow, and then they moved to New York. W.D. Gann and R.N. Elliott, and W.D. Gann was probably pulled heavily. He was Texan. He was pulled heavily towards Chicago because he was doing commodities first. So they were doing all this research and using the spiral and the Fibonacci sequence and all that. At the same time, then I was telling you the story how we set up the J4X indicators. That's from the guys out at Stony Brook, and I guess you could say the antithesis of it is the guys at Stony Brook during the Manhattan Project were using the same work and trying to expand it, using Riemann and Euler and things like that, and game theory and so forth, turning, and then and then I guess it was after World War II and the Manhattan Project was done, that mainframe at Stony Brook was not being used as much probably. So then, what was it? Jimmy Simon took over the school, the physics department. He was a mathematician. He's the chairman. He's the richest scientist in the world, I guess you could say. Jimmy Simon, chain smoker Jimmy, and he was a code breaker and a mathematician for the government out of Princeton. And then when the wars were over with and all, and he started to try to, do math, he went to Stony Brook and took over the physics department as a mathematician when that was not normal. But they were so underwater now from losing all the great minds that they had there, just through time, from Nobel Prizes and Manhattan Project and brilliance to nothing. He took over the physics department in the 60s, the early 60s, and that mainframe was sitting there, and they were using that for stock market research during the Manhattan Project. When they were building the atomic bomb, they would use that same mainframe to play with the stock market. And so all that stuff there's all kinds of doorways there. We have no idea if Jones was using people from that or not. We don't even know if maybe Jones, his foundation, was part of it. All we know is that Jimmy Simons started the most powerful, that's the Renaissance technologies. Was it Meridian Fund, which is the most successful hedge fund in history. So that's where all that mathematics is bouncing around. And I guess now that falls back to was it George when he asked about the delta in options. And then what happened was they legalized options. And when they legalized options in the 70s, early 70s, listed options, that's when Jimmy Simons opened up Renaissance. They had a bad year or two, and then they flew. And so, but he went there. Jimmy Simons was always interested in finance and making money. So I'm convinced that he took over the physics department to get his hands on that computer that had all the research from the nuclear scientists back in the 40s that were trading the markets. So we've had this conversation before. It's a fascinating one. It's a Friday. Well worth having that conversation again. And matter of fact, we may label this as nuclear scientists doing technical analysis. That's pretty much what it comes down to. So, anyhow, anybody want to see anything else in particular before we get too crazy? All right. From there, let's see. Where'd we leave off in the currencies? We left. Oh, that's right. We were looking at GBP and the 2-hour chart. That was cool. Let's go over to the Turkish Lira. Let's got our fingers crossed. Something's going wrong with Turkish Lira. I saw another article that's starting to look not making it very clear what's going on with Turkish Lira yet, but something's going on. Yeah. Okay. Well out of the range. You know, at its highest point. Let's see if it tops out there and moves back down, or they've done something wrong. And you can see here, you know, our weekly. You know, we went into the weekly buy. Why isn't that weekly buy there? There it is. It's going on. This is the second week now of a weekly buy. Boy, did they zoom it. And it's been in a daily buy since here, since the 1550 area, and now we're at the 1750 area. So that's definitely a charge into that direction. That's for sure. All right. From the Turkish Lira, we will drift over to show to you on J4X too. See, there's the dollar Turkish Lira. Same thing. Mad rush. Running hot and heavy like a torpedo. And then let's take a look at it on the euro. Right there. Yeah, lots of strength there. Something's going on. All right. Let's see. What else do we have to say about this? Let's go over to the rub. Sure. The currency that will not be named. This thing's been wild and woolly. It went into the daily buy again there. They hit a low of 55.49, basically 55 and a half. And we went into the buy right there. And we're still. It tried to get into the weekly sell this week, but it didn't. It doesn't seem to be happening. We had a little circle there for a while. Let's remove that. So we're seeing some upside action there. You know, oil is going up in value. I'm a little surprised that it's moving up, not down. It should be moving down more since it's locked to. I guess what's happened is it's being locked to. Oil and minerals now, the ruble, or the currency will not be named, like Voldemort and Harry Potter. You know, basically, I guess you would assume that it would be even higher now. I mean, no, not higher. I'm sorry, lower. I mean, oil is. Let's see, where did I see oil? I just saw oil. Isn't it 114 now? It's like where Brent was yesterday. Right there. Yeah, it traded up to yesterday. Went to 114.74, closed at 14.16. Today it's trading at 13.70, 74, 75. We are flirting now with a little sell. You can see that right there, minus 21, 22, back and forth. Come on, give me 22. No, 20 now, minus 20. It's lifting up, minus 19. So it just went from minus 22. Now it's minus 21 again. Went from 22 to 19. And there's 22 again, and our indicator here. And you can see it's still in that weekly buy. You know, it's not giving up there. So, you know, and since it's locked to the oil market, you know, it's going to be locked to the dollar to a great extent. So, it is a little surprising. I mean, the dollar is going down in value against all the pairs, and you would think this would be going down also if it's locked to just oil, but it's not. So it's obviously locked to the dollar on some level. Alrighty, from there we jump over to, let's see, where do we jump over to there? From the dollar we go to the yen. See what's going on with the yen. There's the yen. Yen's pushing down and pushing down. You can see the curve right there, with the green, so it's trying to lift up. Let's put it up on the screen here. Aren't we supposed to do Canadian? No, we're supposed to do Canadian. That's what it is. Okay, there it is right there. See that? It's trying to get through also. Now we're supposed to go to Canadian. That's what it is. Because when we look at the oil sector, if the oil sector is going up in price, then normally, the Canadian dollar is going down against the dollar. In other words, it's gaining value against the dollar. The dollar is losing against it. It's going down. The U.S. dollar. So let's put the Canadian up there first. Right there. There it is. And there's that pressure there at the same time. So and we're flirting. We're close. If they push hard on it in the afternoon, we could be ended up in a weekly sell on the Canadian. Do 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 do. And let's see what else we got going on here. From there, we have what do we have next? Okay, so then we go over to the South African Rand. Normally we go and we go like this. We go to there's oil. So what do they do in the gold? And we've moved the gold contract. Now, why does that say that? It shouldn't be June. How do we? Oh, I see. It's down below. So there's the August contract right there. And so August gold is the front month now. And you can see the strength in that. You can see the weekly trying to get into a weekly buy, which is kind of interesting. We're seeing some strength there. And I think, let's just look at silver real quick. Silver was much closer, I thought. But you see it's doing the same thing. It's been in a buy for a while there, and it keeps on having problems trying to get into that sell. And so I guess we can change that. Go like this. Copy that and paste it. Put it down at the bottom. And then let's jump over to... I'll take care of it after the webinar. That's what it is. Okay, there we are. So that leads us over to the South African Rand. With gold trying to lift up, we would assume that the South African Rand is trying to find a way to go down against the dollar. In other words, the dollar is going down against the South African Rand. It's gaining in value, the South African Rand. Where is it at? There it is, ZAR. Yep, see it's moving down. Now was in the plus, now it's breaking down into the minus again. So the sell that's been going on since like right here. We had a line in there. I know we had a line in there. I swear these things disappear. And see that pressure on it. Now if this thing falls into the minus, looks like it's doing it as we speak, isn't it? Let's turn that on. I thought that was on. Sometimes these things just drive me crazy. On. There we go. Yeah, it's -3 now. There we are. So the weekly is flirting with the sell side of it. So you've seen that pressure on the South African Rand, which means if it's heading down like that, then more than likely we're going to see gold get some strength. And since gold is already playing with the weekly buy, you have to assume that the South African Rand is going to fall into that weekly sell. See how they kind of work together like that. All right, from there, let's see, where do we go from there? We jump over to the yen then. That's what it is. And the yen is trying to get back into that buy. But the weekly looks like it's going to push itself into the sell. So I don't know. It's going to be very interesting. I kind of thought that this would be the leader in the end, and maybe with Powell and interest rate expansion and the election, this is going to be a bumpy ride, as they would say in Harry Potter. Think it's going to be a bumpy ride. And our math is going to basically keep it smooth for most of you. Yeah, right there. All right, from there, we jump over to the Mexican peso, and that'll finish us off on these currencies. And there it is right there. Nice. Ooh, what is it doing? Is it busting the bottom end of the range? Let's see. Wow. Whoa, I didn't mean to do that. All right, where's the bottom of the range? I moved that thing too much. There it is. Is that it? There you go. Now I grab it from there and move it up to there. There it is. That's the bottom end of the range. So when's the last time we seen that bottom end of the range change? What was that? That's June of 2021. They got underneath it for a little bit. And there is April of 21. So that's a pretty, that's a like a wake up call in the on the continent here. How about that? That's something. It's like, I don't know. Huh. Indeed, indeed. I don't know what to say about any of that. Just the fact that it's doing it is interesting in its own right. To have the Mexican peso starting to make that bust through the range. And remember, Canadian and Mexican peso were really locked inside the range when everybody else got knocked out of it. I don't know what that means more than, was that a combination of safety since they're both bordering countries to the U.S.? That's the only thing I can think of. That's the only way I know how to think about it. Obviously, interest rates were affecting everybody. Obviously, inflation was affecting everybody. And obviously, the safety of, we don't really follow. I mean, we do. Think about it. We were following the yen, and the yen is bordering Russia. So, I guess you can't use the yen. But how about Australia? What other currency could we use to try to see if they survived the range during the start of the war in Europe and the inflation explosion? I'm trying to think, like Australia? I don't know. We don't really look at the Australian market that closely. I'll have to go back and look at the range in that product and see how much of an effect it did or did not do, That's probably the answer to that. And that is kind of like where my head is at. I'm trying to figure out how these things all play out. I mean, without, trying to be too precise, and the end result is that we can't really see, we really don't see the government telling us a lot of information. And that's what the problem is, And due to that fact, we have to analyze this whole process. We have to analyze it and try to figure out, what does this all mean? What is really the rules that the Federal Reserve and the central banks across the planet using? When we find that out, it's always nice. It's even easier to understand the way markets move. Using our quantitative analysis and understanding their psyche, what makes them make a decision, or physical decision, adding liquidity, reducing liquidity, so forth, is a real key to helping out understand these markets in general. So, when I go into this kind of like analyzation out loud type of thing, thought out loud, like, okay, Canada and Mexico are bordering the United States. They stayed inside their trading channels. European Union did not, because, they were in the middle of a war and the inflation hit them at the same time, that type of thing. So it's, it's just a way of trying to understand the whole effect of it all. All right, traders, where are we at now? I guess we're at the end of the road. So we got the U.S. market opens up here in the States in about 3.5, 4 minutes. So I guess what we're going to do is we're going to call it a day. We'll put a title in, And we will see everybody on Monday. We'll go through the markets again, even with the market closed here in the States. We will have currency trading. And we may have some of the other stock. We may have something. I'm not sure what. But mostly everything's going to be closed here. And we'll go through the markets again and look at them and see how they played out today. And you'll have the opportunity to try to make a decision in the right direction for your own investments and trading tools. All right, here. This is Doc from North America. Everybody have a safe and smart weekend. Remember, Memorial Day for all those who've had to deal with everything that's been going on in their lives, or the lack of their life from the wars. Everybody have a safe and smart weekend. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, catch you all Monday. Doc saying over and out.